What's going on, everyone, and welcome to Numbers Therapy. So a bit of background. We created Numbers Therapy originally to talk through the macro and bring on and showcase our experts in Metaverse HQ. And more specifically, so everyone can understand how all the big pieces fit together to make better decisions with NFTs and other investments using a balanced perspective, to learn about or from some of our people in the community, and to learn about different areas and opportunities out there, including different ways of thinking. More on Metaverse HQ, which we call MVHQ. MVHQ is the top Web3 trading and networking community, and we showcase traders, analysts, builders, and a variety of other rising experts in the space.
All right. We'll get started, everyone. Welcome, everyone, to Numbers Therapy, episode 42. Today's episode titled Shitcoins, Optimization, and Manipulation. That's juicy. I'm excited about that. The purpose of Numbers Therapy, as we know, is to talk through the macro, operational, financial, technical, trading-based dimensions of Web3. We're putting the pieces together to help everyone understand the latest picture, continue to elevate while also hearing some incredible backstories and having some good laughs along the way. Everyone who's live, we have a channel for guest questions. Please make sure to drop them in there, whether it's either an intro question in terms of what something means or acronyms, or if it's a more intermediate or advanced question. Please drop it in there. You're probably not the only one thinking it. And as we know, Numbers Therapy is rated NFA, as in none of what you hear in here is financial advice. So without further ado, and on to today's guest and episode. Sometimes when we see someone in their current position, it's easy to think, how did they get to that point? Today's guest is a similar example, juggling both his trading platform as well as a multi-strategy fund. He was slightly early on the crypto side, into the NFT world at a similar time to most of us, has taken that to pragmatically plow forward and codify several businesses in the space. However, I think he's also had lots of learnings and maybe even some mistakes he'll share to get him to the current state. These days, he spends his time more on developing his projects, but he's no stranger to trading. Maybe a bit under the radar, so I think we're going to get a great atypical context from the builder of an awesome class-leading project, his thought process and current mindset is. Very happy to have this guy as a new friend and his colleague. Please, everyone, welcome TheBoggartt to the stage. Everyone, Bog, how are you doing today?
Sweet. Thank you so much for having me. I'm doing well, and what a wonderful intro, man.
Yeah, for sure. I'm really, really pumped for this conversation. In this conversation, we're going to hit at least a couple topics that through 42 episodes of Numbers Therapy, I don't think we've touched a single time. So I'm super pumped to have this conversation today. Let's start at the obvious place. Username. Can you give the backstory to that? Where did your username come about?
Yeah, totally. I mean, so TheBoggartt, I guess it's like some UK folklore character. But when I was a young kid, I had read some book with it in it, and so that was my World of Warcraft character and all that. So when it came to joining the space, it was like, what do I call myself? And it was really the only option that I could think of.
It's funny how username sticks with us this long, might as well. And at the time, it was just a split-second decision, right?
that's right. Yeah, it's like a 15-year-old decision I made as a child. It's now I'm stuck with it.
Exactly. So let's start with the pre-Web3 side of things. Before crypto, NFTs, give some context on your background. How were you spending your time? Whatever you feel comfortable sharing there.
Yeah, totally. I mean, I was studying business for a while and economics, and then naturally, you hear about crypto here and there. I mean, I think my first exposure to crypto, I was buying a knife off of the dark web with Bitcoin when I was a child, and I probably spent some ungodly amount, but I never considered it as an investment. It was always just something that I knew existed, and then so eventually I dug more into it and was oh, there's something here.
It's hard to envision people having such a bad perception of crypto and Web3 when 12-year-olds are buying knives off the dark web. I can't imagine how I come to that conclusion, but really amazing backstory. It's not our usual one. So, I mean, with that example, did you just hear from friends? Is that how you heard about crypto originally? Did you just about it yourself researching? What was your original interaction with it?
Right. I mean, I think it must have been friends or on the internet somewhere or something like that, where you're where can I order stuff? And it was just one of those things where it was you needed Tor back in the day, and everything was just this weird place, and Bitcoin was obviously naturally like what everything transacted with. So it even could have been something like that where I didn't even know, and it was just like, you just need this currency to transact, you know?
It's interesting. It's an interesting point because like almost like what I think people are talking about and hoping NFTs would become, right? Where it's just this part of the user experience in the process. And you just buy this, you need to get this thing to be able to get to where you want to get to. And that's that. I don't know, maybe that's laying a seed of a foundation that exists there. So, okay. So you went in, you bought, your knife on the dark web, but I'm assuming that's not the only direction you took into crypto. So can you talk about, more on a wider basis, how you wound up spending initial time in crypto? Did you go right into trading?
Yeah. Yeah, totally. So once I more around like 2016, I started like investigating it further. And, that's when I was like studying and stuff like that. And then I realized like, okay, this is this is actually something that could be valuable. And so for me, I wouldn't call what I did trading at that point. I was buying and holding, which I was good at, is like finding things that I thought were valuable and just like, watching things like Coin Bureau on YouTube. That guy was like amazing for me. He was always like doing research on new coins and new chains and, all sorts of value props for those. So a lot of my research was just like fully independent, just looking things up, researching protocols, buying. So I was loading bags of Cardano at 2 cents. I was buying Atom super low. And that's really what I did for years. I didn't even know that there were like really communities of people like talking about this. I was just like in a silo doing it alone for a really long time.
Was there a impetus or a catalyst as to why you decided to change your mindset a little bit, shifting from more of kind of like the investor mid to long term-ish kind of vantage point into trading? Was it faster action? Was it risk reward? Like what was the catalyst that kind of got you moving in that direction, by the way? Because it sounds like you were pretty good at picking great spots. It didn't seem like it was a losing strategy necessarily, but why did you wind up shifting?
Yeah, totally. Well, so it's actually interesting. I actually moved to NFTs really before I came back to crypto with a trader's mentality. So, I had been successful in loading my bags of altcoins and whatever. And then I discovered NFTs. And I was like, oh, this is awesome. And so like the first one that I really got into was CyberKongs, which of course it was when, they're very OG and tons of great minds in that community and people to help out. So once I unlocked that, I was like, oh my God, there's like this huge world of, trading NFTs. And so I started doing that. But then through that, I found Shitcoins, which is really like just like a microcosm of what I had been doing before, which was buying things that weren't, potentially rugs, but they were, it was the same thing. You're buying coins cheap, expecting to sell high later. So like that principle to me wasn't foreign, and I started leaning more and more into that. And then eventually, after doing a bunch of shitcoin trading, I came back to just normal coin trading, but now as like a trader with the trader's mentality of like learning, leverage and things like that, and how to actually like buy and sell these things on a shorter term.
Yeah, it sounds like when you and I were talking for this episode, right? I know part of what happened was, and you said you started with, this isn't rocket science or anything or deep math, but you started in 16. Obviously, you went until about 22 until you entered NFTs, right? So obviously, within that time frame, you hit cycles, you hit up and down cycles more than maybe some people within MVHQ, who some of them are newer, that kind of a thing, right? So, what was that experience like for you, where you had up cycles, down cycles? How did that impact? I have to imagine that was part of the reason why push towards trading as well, is making right choices, seeing it fade to some extent. So yeah, how did that impact your foundation?
Yeah, well, so it's interesting. So like, the bulk of my funds that I invested into crypto was, generally like I was into crypto before the last cycle's all-time high, but I got really into it right around last cycle's all-time high. So I watched my portfolio just get like completely obliterated very early on in my process, and I was like devastated. But I thought, like I got to just stay at this, and that's in that period is when I was loading alt bags and things like that, DCAing the bottom. I was dumb enough to buy the top, so I wanted to be smart enough to buy the bottom, and I like kind of forged my way out of that fire.
Yeah, I mean, what did that, other than buying the bottom, which was an obvious takeaway, like, did that teach you anything else? Like, did it teach you most specifically like the fact that there are tops and bottoms? Did it teach you,
Yeah.
how to manage? Yeah, go ahead.
No, I was just going to say, really, like my big takeaway was just like that you have to stick around, because there were so many people that were in a similar position to me that got wrecked and are like, I'm done. I'm leaving. Well, how can I stay here and do this? And then those are the same people that came back in 2021 and bought the top again, And so like I think my biggest takeaway was just like you just had to stay at it. And like I was able to see there's always opportunity, even when it got really bad. Like that's just more opportunity.
It's like a really, I'm sure, somewhat cathartic thing for people to hear, especially people in here right now, because within the Web3 space, right, within NFTs, like it is a little bit trickier right now, as we know is the case, because the macro environment and beyond. It is nice to hear that sometimes that we're on the right track, right? But it's just tricky times that exist. It's just down market at the end of the day. It hasn't changed anything else. So yeah, definitely refreshing to hear that that's the case. Before that point, by the way, like so into 17 to 22, let's say you were in crypto, 22 on, you started to move into NFTs, and then you traded your perspective more towards trading. Were you focused more on like your individual assets at that point? Had you entered or created projects before that point, or was it mostly on your own trading, investing, that side of things?
Yeah, no. So like, so I joined CyberKongz, I think, August or September of 2021. So tail end of 2021 is when I really got in, started getting into it. And then, but I had never done projects prior to that. No. And it was just like, that's such a good community of like smart builders and things that I was very lucky to just network with other, experienced people. And, when we found ourselves having a good idea, it was, I was able to just communicate with people, put our heads together and make something. But no, I had never done a project myself before we did ACYC with me and Nate at the head of that. Nate Rivers, for anyone who knows.
Yeah. Amazing. I didn't realize that ACYC came first, actually. I thought Consortium came first, but very interesting. So simple scenario that we've all seen. So you had your community, in that case, CyberKongz, like you were saying. You were probably putting your heads together, discussing things, much like many of us are, and you mobilized it. It was really that simple.
Yeah, exactly. So so the focus for me, I was trading my own portfolio, whatever, but you're communicating with other people. And then like, as we were trading coins, we saw this opportunity where we were like, oh, we see like there's a potential here to do an idea and do it better. Like I see what these other people are doing, like, and it's really half-assed. Like we could put in some work and make something a lot better. And obviously, you need the proper network of people. And I was lucky to have that. So yeah, that's sort of we leaned into it.
Was there like an actual split decision for you in that process where other than just like naturally talking, naturally discussing things and you're like an opportunity, was there a point at which you stepped back and asked yourself, do I want to go into the business of developing projects versus just trading, for instance? Like, did you step back or did it just kind of happen organically and all of a sudden you woke up and ACYC is happening and that's it?
No, that's a great question. And I would say it's more the latter than the former. I think like up to that point, I had never really conceptualized how much goes into running things. And while I'm fully capable and happy and ready to do those things, it just wasn't, we had no conception of the scale scope or, like where it would go from there. So it was kind of just, it wasn't very much like, I want to be a founder of something. It was just like, let's make this awesome thing. And then all of a sudden you're sitting there and you're like, oh, wow, we've like made some big thing,
Yeah, it's funny. Like even if you had taken that pause, very hard to communicate that. I feel like to someone who's never built or founded something before, what it actually feels like being that person and where the pressure points come from and all that stuff. So totally understand where you're coming from. On the Consortium side of things, I want to talk about that project because I know that's your flagship. You started that in, I believe, 22 plus or minus. Tell us about the thought process in creating that. What the launch experience was like for you.
Yeah, totally. So as I had mentioned, we had made ACYC, which was really like a way for it. The idea of it is to be like a decentralized fund where people hold tokens and then, we farm, invest, trade NFTs, whatever, and then distribute that to token holders. So it was like, and what we were doing in that is as treasury managers, we had to develop some custom tools for ourselves to help trade. And at a certain point, we were like, well, you know what? Why don't we lean into this and make like really lean into making tools that everyone can trade with. Why keep it to us? And we had some great ideas. We were already like doing things based in Discord with like we had our mint bot. We had built that in Discord where you were just typing a command, an exclamation point command, and able to paste in a contract in Mint. And we thought, like, man, this is so novel, like being able to operate from Discord. Like, let's make a tool suite where it's entirely based in Discord because everyone's in NFTs is based in Discord. So we were like, let's do it. So that's kind of where we started. So we launched, it was the first minting bot that ever existed that works on mobile because it's built into Discord. So it didn't matter that you're on a phone or an iPad or a Nintendo Switch running Discord. It worked. So that's how we did it. But the release was actually like, it was tough because we had to put in a lot of money up front into development because we wanted to launch with a fully fledged product. We didn't want to say like, give us a bunch of money and we promise we'll build something. That's not my favorite model as a consumer. And so we were like, okay, let's build the product and then release it. But that means that you have to structure things appropriately on the other end of it with your mint price and stuff. So we minted, relatively cheap for what we had as a full suite. It was like, I think 0.44 for whitelist and 0.69 for public. But with mints and things, it's so hard to garner the proper attention that you need to really go for it. It's such a nuanced thing launching a project. But luckily, we had enough of a base where we didn't mint out by any means. We minted 500 of a 2,000 supply, but that was enough to get us going, and it actually worked out in the best, or for the best in the end, just because it gives us more opportunities to navigate our own ecosystem and have a little more control over how it operates and who's within it and stuff. That's kind of how we got started.
Yeah, thanks for sharing that. That's like a very open take that I feel like most would not be so open with sharing. So I appreciate you sharing that context and what it was like and the challenges you saw. There's an actual, like another decision I think in there that's maybe worth calling out as well, which is you had ACYC, right? You decided to develop the proprietary tech, the tech as related to that because you needed it for ACYC, regardless. But there's an important decision, of course, that exists there too, which is, you keep this tech proprietary, and do we think it provides a competitive advantage for us in a fund, which is, oh yeah, by the way, scalable, or do we make this tech open for everybody so that we can monetize that way? Well, I'm curious to know what I'm sure you guys discussed that, right? Do we keep this tech to ourselves? Do we open it up to everybody as a project? How much was that discussed? Was there a reason why you landed on open versus keeping it proprietary ultimately?
Yeah, I mean, definitely. I think like what it was is like, first of all, the idea for ACYC since day one has always been like to be a decentralized fund that's non-reliant on like Nate or penny bags farming and trading, even though that's like the stopgap at the beginning is we have these amazing, traders operating the treasury. So with that in mind, having tools that are more available for people in the community as well to use opens up an opportunity down the road to sort of lean into that as far as the decentralization of the protocol as a whole goes. So while it was like a nice competitive edge to have for ourselves, I think net long run for what we want to do and how we want to see the space develop, it just was more beneficial, I think, for more people for us to do it this way, even if, we could have just kept our heads down and traded, quietly with our own tools, but, it's not as fun.
That totally makes sense. I totally get your thought process. I guess there's a related thing to this too, which is probably coming at an interesting time, which is probably when you started the project, right? I mean, you had probably projected economics that would have So you minted 500, right? You said, okay, we're in the business of developing tools and tool suites, and that's always going to continue, right? Because there's always, innovation within the space. There's always new concepts coming up, like so on and so forth. Of course, like a portion of that probably would have been accounting for royalties to be able to fund a lot of that innovation. So we're at this current state right now, as you know, where there's a lot of 0% royalties that exist out there. I'm curious to hear, what are your thoughts regarding that in terms of where royalties you think are heading? How do you think that's impacting project innovation, if at all? Any thoughts there?
This is a great question, because I think this is super poignant and related to the space right now, because so many projects have depended on royalties as a stream of income, and people don't realize, like, at the end of the day, NFTs are businesses, and you need funding to operate, and an initial mint is not enough. So, our structure, when we minted this royalty thing, wasn't an issue, but we did anticipate and know, like, okay, we can't operate just off of a mint cost, and we're not going to mint a second collection later or something like that. So we actually minted cheaper initially, and since mint day have said we will eventually be a subscription as a service model where you can get access to XYZ, and then our bots are gated behind a subscription. And that also allowed us to mint for cheaper, where it's like, okay, less initial cost burden on the consumers, and everyone gets to get used to the product before we introduce that. So like a month or two ago, we introduced our subscription, which is a nice nice thing, because it gives you revenue. I mean, we have 5 developers, and the team, it's like a team of 20. You're running, it's a business. So you need that. But royalties, I mean, we've been getting destroyed where, you lose. It was funny. Blur gave us like an 80 ETH airdrop. I was like, great. Like, you take 30 ETH a month from the business, but where are royalties going? I think this is such a great topic. And I think where it's going is consumers are going to have to pay royalties. And it's that simple. If you want to buy a product, and if you want to come join Consortium, you will have to pay your royalty. And that is something that the tech has been being developed. We're working with tech partners right now, that it puts it back in the creator's hand, where it's, if you want to come and use our product, you have to show that you've paid royalties, because that if you want our shit, we need to operate. That's how it's going to happen. And I think that really makes more sense. Is to just say, like, look, if you are a consumer, if you want to use a product, you need to support the business. Royalties have to be paid. It's that simple. So that's where I think the whole space is going to move to, because this cat and mouse game where they're like, oh, you can migrate to a new contract with an OpenSea standard, and it's like, that's totally ridiculous. You can't be playing catch up with every new marketplace that comes out and has a 0% royalty thing, and you can't be migrating every NFT contract and losing every transaction history, volume history, price history, all of that. It totally makes no sense. I think the only solution is to just say on the consumer side, like, look, if you want to use our product, you just have to have paid your royalties. So that's where I think all projects are going to go.
I 1,000,000% agree with what you're saying. And it's frustrating, right? Because on the one hand, like, you can understand everyone can complain about margins. And in some cases, it was egregious, right? Where, what was it with, not to pick on the project, but with Pac, if I'm not mistaken, wasn't it like 50% or something like that, 50% royalties that he imposed? That's a strategic decision, right? Like, that's part of the product that you're buying. Either you're okay with that or you're not okay with that. If you are okay with that, then that money is used towards whatever innovation or whatever, even to motivate the project founders to develop. However the heck it's used, it doesn't matter. It's the same thing. If you're not okay with that, you don't buy into the project. But like, the whole premise of Web3 breaks down when there's no royalties that exist. I mean, have you experienced a couple of cases like that where you did have a roadmap, you had things that you wanted to do, and because the model changed because of this pressure, all of a sudden you had to adjust your model to some extent or adjust your roadmap to some extent? Is that something in yourself? Have you seen others have to do that?
Yeah, I mean, so for us, like, the way that, like, our operative structure, it's certainly affected by revenue streams. Like, the more revenue we have, the quicker we're able to iterate and develop on our tech, certainly. So, and just the more opportunities you have for all sorts of stuff, whether it's new analysts, development speed on the tech side, whatever it is. So certainly it affects how we do it. Now, luckily, we run like a proper business. We have a CFO, like, we manage our stuff properly, so we have proper runway. But it definitely is very constricting on what we are able to do. And I think especially for, like, so many other projects that haven't been ready to, be subscription based or have a fallback plan, I think we're going to see, in several months, many projects have bled through their treasuries and have nothing that they can do because of this type of issue.
Yeah, I mean, it's very, very magnified right now, where this is literally a weather the storm situation. And I not only do I agree with what you're saying, I mean, I have to also imagine if you're, and not to pick on OpenSea, it's the obvious one that exists, right? But if Blur comes in at 0%, and like we're competing on the wrong things here at the end of the day, right? Fundamentally, like the setup in the equation for the innovation of the space was set up right? Pay the people who you need to invest mental energy and care to be able to develop your projects. So ideally, your bags don't go to zero, right? I mean, this is good for everybody at the end of the day. And there's more innovation, and it's more differentiated, and so on and so forth. When, like you're saying, when the marketplaces come in and they're like, why are we competing on 0% in cost? Like we should be competing on innovation and value and traffic and all the other things that could be brought that could make the process better, make transactions more, make NFTs more liquid, all the other things that could be provided, tools, so on and so forth. So, okay, sounds like we're speaking the same language here, which is nice to hear.
Yeah, it's just they've targeted project creators in that sense. Where and especially, I just saw OpenSea reinstated their 2.5% royalties on their platform, but that's for them. They're not enforcing creator royalties; they're enforcing pay OpenSea royalties, and just so it's so funny.
Personally, I like the way that it worked, originally, which is each project gets to decide whatever their strategy is as it relates to royalties, right? You're developing a product. The product is what the pricing model is, which is mint price. Part of the product is also what the royalty model is. And either people will take to that or they won't take to it. And it's really just that simple at that point. And by the way, you buy it and you're okay with it up front. On the way, you wind up not being okay because they don't innovate fast enough. You can also sell at that point and leave, not like the product at that point, right? So it doesn't matter whether it's upfront, if it's royalties or whatever it is. Like with every single good or service on the face of the planet Earth, either the value equation is good or it's not good. It's really that simple. And in this case, it's just constructed. So fair enough. You played a lot of, so within, Web3, you've played a lot of sports in quotes, I think, over time, right? So we call different sports, like different things that you can spend your time on. So crypto, I think you've spent your time on, right? Trading, investing.
Yep, that's right. Yeah, really started with just very investing crypto. Yeah.
Shitcoins.
Shitcoins as deep as it gets.
He's in minting.
Yeah, minting. I disgusting amount of minting pre ERC 721A too. So my old wallet has like 300 ETH spent in gas when ETH was 3 to 4K. It's like horrifying.
Trading, obviously, you spend time on.
Yep, especially now, really leaning into that.
Staking.
Yeah, I love that. Was really with investing that I was so happy to stake my ADA for 8% on the year. I was like, I could do this for 3 years. Even right now, I've been staking Canto since October or something.
Okay, airdrop farming, recent sport. I guess it's been around for a while.
It's a recent sport. I've had my attention there, here and there, but yes, I've very much wanting to just lean into that and have been much more so recently.
Okay, so we have those 6. I'm probably missing a couple of things as well, guilds, let's call it, when gaming was a thing, and so on and so forth. But there's all these different sports that exist. There's also all these different verticals that exist as well, cutting across in the other direction of these two, right? So my question is how do you think about spending your time, be it for ACYC, be it for whatever? There's only so many things that you can do, right? So thoughts in terms of the flexible, open-minded model where you're always figuring out not just what the meta is, but what the sport is also to some extent? Or do you tend to, take a step back every so often, figure out where you want to focus your attention and then focus it there? How do you tend to approach that?
Yeah, totally. So for me, it's there are certain things I would say in my day-to-day, you have things like shitcoins and, leverage trading, and maybe NFTs here or there. And that's those things, they're market reliant. Leverage isn't as much. So I figured there's always something to be doing or learning or trading. So, I'm monitoring shitcoins all the time, but there's very often, you'll spend hours without anything coming by. So it's not like you're actively doing anything besides monitoring a channel or a site or whatever it is. Same type of thing with an NFT mint, whatever. Leverage is more forgiving in that, technically you can be trading anytime, of course. But for me, any downtime that I have is either spent, in an educative sense where I'm studying, learning more about trading, watching videos, reading stuff. Or, nowadays, downtime is very great for airdrop farming. Exactly. So there's always something you can be doing.
I mean, that kind of segues in pretty well. So we're in this current market right now, and know that there's like, some opportunities that exist, certainly, right? But it's not nearly what it was before in terms of constant opportunity. So you have a market dynamic that is what it is right now with kind of the bear and the macro situation, and then all the pressure points that we just talked about as well, 0% royalties, which limits innovation, and so on and so forth. What is your perspective on what we're trying to optimize for in this current market?
Right. I think for me, what I'm trying to optimize for is like tuning my radar to be able to spot opportunities. That's really it. And it's not even like I don't even care if I catch every opportunity, because really, for me, protecting bottom line risk management, regardless of what it is, shitcoins, leverage, NFTs, is more important than anything. Like missing moons is totally fine as long as you're not getting, it's better than getting rugged constantly and running out of bankroll. So for me, it's optimizing to just be able to spot opportunities and understand how to actually act on that stuff. So yeah, it's an observant thing, because when bull comes, you got to do that way quicker. You got to observe and act very fast. So the more time you can spend now tuning that radar, I think the better later.
Yeah. So the premise being like what you learned, I guess, from entering crypto originally is you don't know when the market's going to start to move, right? We know directionally that the macro is banged up right now, but sometimes there are catalysts that come, right? That take out of nowhere to some extent, barring macro situations. And so it sounds like your concept is to just stay on your toes, not knowing exactly when it's going to come. So when it does come, you don't have to play catch up at that point. Is that a fair summary?
Right. Yeah. You're sitting there, you're sharpening your knife and you're watching, and you don't know when something's going to come that you need to like use it on. But like if you're there, you're watching and it's ready, then you are too. What you don't want to do is be the guy that's like waiting for the market to heat up, and then you hear about it, you come back, you're like, you're on the tail end of it, and that's how you end up as exit liquidity, because it trickles down.
I don't know how comfortable I am with the multiple mentions of knives in this episode, starting from the dark web originally, and now we're starting with a figurative knife. But nonetheless, it applies. It started there, and onward we go. I know shitcoins is something that you've spent a lot of time on, a disproportionate amount of time on. What's your draw there, first and foremost? Why do you spend so much time on that? Because I'm sure there are folks in here listening later who've gotten burned more than once or twice on shitcoins. But what do you like so much there?
Yeah, I mean, for me, it's just the opportunity. Like, there's nothing at all I've ever seen like it on Earth. Like, once every few months, you might get something in NFTs that's really good. But for me, like, as far as risk reward goes, like to make it in NFTs, you're often like, if you want to mass mint something, like you're taking a very big risk. Even if it's a free mint, you're paying a lot in gas. You don't have much ammo. For me, with coins, my entries are often 0.025 ETH. And that can turn into, a crazy amount. At the beginning of the year, I bought this coin BC 0.075 I had in that. If I had held my bag to all-time high, I'd have 160 ETH from 0.075. So from a risk reward standpoint, being able to tune your radar to that and get good at it, it's unbelievable opportunity. One of the guys in Consortium, he's the best shitcoiner I've ever met, Nacho, he just turned 1 ETH into 240K in one coin. And that takes like 3 days. So it's like the opportunity is unparalleled, and it's so frequent compared to other markets that I've seen. Like this is happening every single day. Every week there's an opportunity to hit huge shit, but it does mean like you have to A, be active, and B, you have to be ready and willing to lose money and get rugged and not get discouraged. And I think that really applies to anything, is like you only invest what you're willing to lose. And it's very, very true in this. But being able to remain motivated, even in the face of like consistent repeated loss, is like the only way to win. I think the only way to lose is to get discouraged and quit.
One powerful sentence in shitcoins, the whole evolution of MVHQ emerges into the future as heading towards shitcoins, possibly. Let's maybe extrapolate the shitcoin comment that you said to some extent, because there are similar-ish principles that you'd apply to NFTs. So what is that crossover that exists? Because a lot of folks in here have more familiarity with NFTs, maybe some of the folks listening as well. Do you think there are similar principles or similar techniques or similar approaches you would recommend with NFTs? Do you just think that coins are more market adaptive, and therefore, even though they're not always active, they're a nice complement to always have on with NFTs? How do you frame that?
Yeah, I mean, so I think like the parallels I would draw is like all the principles of trading psychology, which is like having first of all, like having your own reasons to get something, so you're not buying someone else's conviction that when you're facing a downturn, you don't have the conviction that the person you bought because of did. So being able to principally being able to have confidence in your own ability to assess things and buy things. But I think again, the other one is being able to stomach loss. Like that's huge. And for me, like I've always said, every cent that I've lost, it's tuition. And as long as you're learning, you're gaining something. People think, maybe I've been minting NFTs and I've lost 5 ETH, or I've been, trading secondary, I've lost 10 ETH. I've tried shitcoins, I lost 3 ETH. And it's like, okay, but did you gain knowledge? Did you learn from that? Because if so, you're just paying a tuition payment and it's totally worth it. It's okay to spend thousands of dollars that you quote unquote lose if you're gaining education. I mean, that's what any education is, standard. You're paying when you go to college, they're not giving you an ROI, they're giving you information and knowledge and you're paying for it. And so I consider loss the same thing, as long as you're principally learning from that, no matter what it is, NFTs, shitcoins, etc.
Yeah. That makes sense. I mean, can we talk about one of the related things to what you're saying too, which is you see, you're in your community and you see Nacho in this example, like turn the 1 ETH into 200 or whatever it was you said, right? And so oftentimes you're sitting there, and if it's not your, again, back to the analogy of sports, but like if it's not your sport, right? You're not a shitcoiner in this example or whatever else it is. Sometimes feels like that pressure that you have to press the edge in cases like that, because you're looking around, you're like, I really want that, and what's my risk that kind of exists in this case? Only a little bit of risk. I'm going to dig in at that point. I mean, how do you find yourself, or as you watch others, managing that pressure, well, so that you're not overstepping and you're not overpressing edges? The equal question would be your comment earlier that you said is you have no problem missing absolute upside as long as your risk is mitigated. So maybe the question's more about that. Why is your mindset so much more towards risk mitigation than it is about catching upside?
Yeah, nice. I think there is definitely crossover there. So for me, I think like an important principle that I always like remind people when they're coming into this too is, first of all, everybody's had to learn, and there's no shortcuts. People think that there's some secret to it, and there isn't. It's a lot of just work and just consistency and discipline. But the thing that helps me is just to understand, like after being around for so long in this space, I've learned through cycles, I've learned like there's always opportunity and there's always going to be more opportunity. So it's okay to miss whatever, next few things are, because there's always going to be another one down the road. Like as long as you don't spread yourself so thin, and that's where the protecting the bottom line comes, as long as you don't run out of, money and have no ability to trade ever again, then you're fine, So that's why I'm okay missing moons, because I'll be ready for one and I'll catch one eventually, because there's always going to be more opportunity.
I am very, very, very confident that if we look ahead like 2, 3, 4 years into this group here, there's going to be so many folks who do exactly what you're saying, which is just keep the knife sharp, risk reward, stay afloat and everything. And they're going to have so many lessons that they learned from the last cycle that it's absolutely will not be messed up again. And so I'm really enthusiastic and excited to see 2, 3, 4 years out how many people in here are succeeding and thriving, and then outside as well in the community, but certainly within MVHQ, who are thriving and succeeding because all these lessons that you're talking about right now, and not just balancing risk and reward from a generalized standpoint, but just really taking forward those lessons from past cycles as well. So I do want to bake in one other thing into this that we have not spent a lot of time talking about in numbers therapy, that it's definitely worth talking about, which is the manipulation side of things. So maybe we'll start top down here, which is maybe if you want to give your general viewpoint and context on manipulation. I believe when you started, you mentioned to me, in like fewer words, you kind of didn't think it was a thing or didn't spend much attention and time there. And I think for many of us, myself included, we're a little bit naive about that and limit our focus on that. But I believe in your case, you're very big on focusing your attention on there, but that was also a knife that you had to sharpen. So can you talk about, like, in general, how you started thinking about manipulation, how you frame it, and then maybe go from there?
Yeah, I mean, and so I think an interesting one is like manipulation. It has such a negative connotation, but I think like realistically, when you think about like what manipulation is in principle, like it's not necessarily negative. It's everything is manipulated in a sense, and it's manipulating perspective. It's just changing variables, to do something. And so, and really you start to notice it across everything, and it's more obvious in things like order books and leverage. You might be able to see like it's highly manipulated price action. Like they come to purposely liquidate longs or shorts, and then they, go back up so they can load up. Like, and you learn about how to recognize those patterns and trade within that. And so, like, that's a very obvious level of a manipulation where you have people that are, huge entities that are, buying, selling, manipulating price. But then, there's the level of social manipulation we see when it's people, all loving a project and talking about it socially and things like that. That is a level of manipulation, and it's not bad. It's something that you want to be able to recognize and actually like capitalize on. The same way that I was saying that with leverage, if you understand how order books work and how manipulation works in general coin trading, you're able to capitalize on that. And it works the same way with a manipulation in the sense of a social manipulation in NFTs, where you can see the way the trend is going and the different influencers that are starting to support something and utilize that to sort of to make money on it as well, and not find yourself on the end where you're the one holding a bag. And I think for me, it's just it helps just to keep perspective, so you don't go down with the bag. I think like realizing that so much of the space is just that manipulation helps you not marry the bag, because it's like and it's not like a cabal of people, but it's just but it's social manipulation. People get into things and then they get out of things, and they get other people in, and then once everyone stops caring, they stop caring. So it's just remaining realistic about all of the markets, and it's the same thing. All the same stuff applies to shitcoins.
Yeah, that makes sense. And I want to give everyone listening, especially live, but even recorded as well, like something tangible to take away too. So I get conceptually what you're saying, but on the same token, right? It can be a little bit overwhelming hearing that, right? There's institutional manipulation, there's large groups, there's social versus price, and so on and so forth. So like, I think we all know, certainly what you're talking about. We've all seen it and experienced it before. It can feel a little bit paralyzing in terms of where to start. Any thoughts in terms of where to start if somebody's not familiar with how to put these pieces together? Should we, should we be spending time on Twitter as an example and like watching projects specifically? And if so, do you take a certain sample size of projects and then watch how they react to be able to form your opinions? It just feels like there's often a lot of projects, a lot of things to be able to approach. So I want to give something like a little bit more, a starting place, if possible, for anybody that's trying to learn about that.
Yeah, I mean, I would say like so much of it is just experiential. And that's where it really comes back to just remaining active and not even needing to be trading. Like I said, I think one of the biggest mistakes or issues people have is this FOMO, where they feel like they have to be trading with everyone. But you could just sit back and just observe. And especially maybe you keep a trade journal, or maybe if that's conducive to your learning process, start keeping a journal, making notes about things. But really, I think so much of it is just experiential. When you just see the same thing happen 10, 15 times, it puts you on the path to be able to observe it more. I would say like really, it's just as simple as being cognizant that these things are going on and keeping that in mind while you observe things moving forward. And then you start to notice, and it's like, oh, this is the same thing that I've seen before. And when it comes to something more specific like coin trading, that's actually like learning to recognize how those are manipulated is like an actual thing that you use. It's a skill you use charts for and ranges and things like that. So you can actually like actively learn that stuff by studying like material. So for me, a recommendation I would give is Rektproof, REKTPROOF. He's one of the best like leverage traders I've seen. He's taken a few hundred to six figures several times, and it's always working within a framework of understanding the market is manipulated. These are the patterns you can see in price action, and these are how you can capitalize on them. But for NFTs, it's certainly much less like it's certainly much harder to see, especially on that social level. And that's where I think it just comes back to just being aware it's going on, and so then now you're paying attention and you're on guard in a sense.
You can't see it in the background, but as you're saying all this, I find myself intentionally becoming more cynical and jaded and hardened, and also writing on a piece of paper. This time is not different, so I can paste it on my monitor as well, so I don't forget next time when the same headers.
Yeah. Well, being cynical is being smart, really, in this space. Like, I think so many of us got like jaded and married the bag. I mean, I've married my own bags big time in my life, and a lot of the things that I've taken under tow have come from hard lessons of round tripping massive gains and things like that, because I was, in a sense, blind to the ways that the market was operating. Everybody is smoking the same opium and pumping each other up, and nobody's like, hey, like, reality check here, like, you're all just like manipulating each other into like marrying the bag, and someone's left holding it at the end of the day.
Yeah, that totally makes sense. I'm curious to know, like, so again, we find ourselves in 23 right now, and the macro still looks a little bit shaky, as we know, right? I think most people would probably agree with that being the case. We discussed it on the last episode as well, in a good amount of depth. But do you have any personal thoughts? This is not wider thoughts, but personal thoughts in terms of where you think these markets are going. So we talked about royalties already. I think we have a sense of where both you and myself we think that's going. In terms of like product categories, for instance, or project categories, Bitcoin's going to make their way back sometime soon. Do you think they're going anywhere? Like, where do you think we're heading with all this? You think more traditional utility plays are going to be factoring into NFTs more, and including real estate and that side of things? Like, what do you think the future holds in the near term?
Yeah, I think the space is learning in some senses and realizing like what equates to value, or at least maybe if they're not realizing it, we know more what doesn't equate to value. Where, you could see we were before, everybody was like, oh, a project with VC funding, you have moonbirds, you have doodles, like, that's great, like, that's worth a ton. And now the space realizes, well, like, you know what, that actually doesn't translate back to me at all. Like, it does mean that this business has runway, but how does that translate to value for me? Well, it doesn't. And so I think there is more of a priority being placed on things that people can actually derive direct value from. In our case with Consortium or MVHQ, that's information, it's alpha, it's techniques, it's knowledge. That's quantifiable stuff that provides direct value. So that's awesome. That always will have a place. But then you get into less tangible stuff. And I think the space has less of a tolerance for it, where it's like, I don't care about a merch drop anymore necessarily of fanny packs or whatever it is. It's like, that's not going to sustain a floor. I'm interested more to see, where I think the market is going. I am interested to see that. I think we still see something the market falls victim to, for lack of a better word, is like the Ponzi ecosystem. The market loves a Ponzi ecosystem, and they still do. Buy this so you can get whitelist to mint this, whatever. For me, like the most, and it's profitable. Don't get me wrong. I love to play the Ponzi game. It's an amazing game. It does mean somebody's left holding the bag. But so for me, I look at something like, in my opinion, I look at something like Meme Land, and I've always been like, look, for me, Meme Land has only ever just been like, oh, now you got your Yoga Pets whitelist, and now you got Coobs, and now you got this, and now you got that. And it's just like, but people like it, so it always has value. And so play the game while it's there. But it kind of comes back to that cynicism where it's like, reality check, like, what is the value you're deriving from something? Is it tangible? Is it sustainable? Will it always be around? I think the market will always. I think the market will always, do what makes them money. I just hope that the market becomes smart enough to like know that they're playing the game. Play the game, but know you're playing the game. It comes back. Don't marry the bag. Don't think it's more than what it is. Like, you know what I mean?
Yeah. I guess the one related thread to that is, we've seen like over the past year or 2 years that there's a lot more tools that are coming in, which creates more efficient markets, rational markets, efficient markets, right? And that makes sense, right? That's very, very surprising consequence from what was happening before, when it was very inefficient and everything. But I think there's worry that like that inefficient market won't come back again, and I'm not sure that that's the case, because exactly what you just said, right? At the end of the day, people do like shitcoins. People do like, the Ponzi examples like you're talking about. People like those very, very irrational plays that exist, which then create a lot of upside. And also, like you're saying, these kind of social manipulation and other pieces always exist as well. So I just can't envision that will ever really go away, to be honest with you. Maybe it'd be
No, I don't think so either. Yeah. I think like the people who are able to recognize it the most will be the ones who exit the top the best. I think there will be people holding the bag, but I mean, the truth is there's always going to be a level of people that are just not nearly as thoughtful or experienced, and they're coming in and trying to play the market however they do. But really the amount of people that aren't paying as much attention to really what they're doing, I think, is much greater than the percentage of people who are. So I think those market inefficiencies will come back and really be highlighted more and more just as the market is less scary. Because I think it's also those same people who go away when the market gets a little crazy like it does right now. But I think they'll absolutely be back. Of course, for me, I used to see it in crypto investing. It's the XRP bulls. It's the guys who are like, Ripple is the best thing in the world. And you're like, this makes no sense, but you're so bullish and Ripple's going to absolutely rip because of it.
Yeah, I mean, you could see what you're saying even within here, right? Where different striations and groups of traders that exist. Some who are very, very sophisticated, some who are the next level, and so forth. I'll at least call myself out to make fun of myself, which is I'm definitely not even close to that top tier. That's not my best skill by any means. So hopefully that gives confidence to at least anybody in here, such that there's even levels that exist within here, let alone outside.
What's really interesting is what I always love is I love and it's a meme, but it really does apply, is like the left curve, right curve meme, and then the middle curve, where people on the left curve make money because they're not even thinking about it. They're just like, like good name, I'm buying. And people on the right curve are, zen enough to get into it. And then people stuck in the middle are like overthinking everything, why am I not making money, whatever. And it's like, it's totally good sometimes to be left curve. Like with shitcoins too, like I always tell people, like, go hit your head on the wall like 10 times, come back and then make a decision. Like go lower your IQ 50 points and be like, oh, Elon Doge, like good name, buying. And you'll maybe be a lot more profitable, and that's okay. I think it's you just find your place, and try not to get trapped in the middle.
Funny. It's absolutely too funny. Well, this has been just an absolutely awesome conversation. I'm really happy that I've never been able to tag shitcoins or tag manipulation, assuming we had tags for numbers therapy. We've never been able to do it before, and now we're able to do it. Really, really fascinating perspective that you had in sharing your background in terms of why you built the projects that you built and the thought process and kind of how that happened and even how you pick your sport and how you balance. I just really love this conversation. I'm really, really thankful that you came on and you were so open about your thought process and how you approach things. And so maybe we'll have to do a follow-up in the near future to kind of see how all this evolves. But really appreciate you coming on. Really appreciate everyone in the live audience, like always, as well as everyone listening afterwards. Thank you so much. Again, Bog, thank you so much for coming on, and we'll see everyone similar time next week. Oh, sorry, 2 weeks from now. NFT NYC,
yeah.
2 weeks from now. Everyone soon.
Yeah, I mean, thank you so much, man. I really appreciate you having me on, and I always love to be able to share some good perspective on at least the lessons I've learned. And I think the one takeaway for people that I should say is just like, try not to feel FOMO, because there will always be opportunities, and try not to get discouraged, because as long as you're learning, you're gaining, even if it's not in, portfolio value, it's in mental, capacity.
Yeah, that sounds perfect. Well, thank you so much. And we'll see everybody.
Yeah, thanks, man.
Similar time, 2 weeks. 2 weeks, everyone. See you then.